I'm not sure if you guys have seen the recent Bloomberg interview with Mike Novogratz. He's a billionaire that's really investing a lot in the cryptocurrency space, and it's speculated that he's getting ready to launch a fund of approximately $500 million. So on that, Kevin, if you could speak to what custodianship is, potential exceptions to that, you know, and whether or not there's potential, you know, the panel, feel free. You know, is there liquidity to handle a fund that's worth $500 million?
Yeah, I'll speak to the regulatory considerations about having a fund that large, and I'll defer to the other panelists on the liquidity point. But you know, so ultimately, if you create a fund and you're going to invest in things that are securities, so maybe he's going to do. We don't know what he's going to do in it. You know, he hasn't really been very public, and he can't be because he's doing a private offering about what he's investing in. But say he's more than half his fund is you know, securities, and he has tokens on the side. Well, he's going to have to register as an investment advisor, presumably, unless he's doing this from outside the U.S. And you know, running a fund as a registered investment advisor, then you need to comply with what we call the custody rule, which requires basically a national bank hold every security, you know, or the assets in your account, in your fund. Now, you know, I think that's been something we've wrestled with. There's no, I don't know with an answer. You know, I don't think there's custodians out there that are willing to custody tokens at this point. And you know, the rule requires you to keep it with an FDIC insured bank or a savings association, a broker dealer that's registered. You know, so you know that's something that the industry will solve over time. But I think that's one issue. I think, you know, especially with respect to European asset managers developing European funds, you know, we've heard that it's the AML rules in Europe are very strict, and it's difficult to, you know, you can get a bank account for the fund, you can take in the cash and buy the coins, but getting the coins back to fiat currency to then pay out to the investors, the banks are having difficulty, you know, because they can't track the source of funds, and so they can't fully comply with the AML rules. So that's another thing that the industry has to solve for. But you know, a $500 million fund that it's a securities pool, you know, will be, you know, there'll be some issues to navigate.
I think just jumping in on the liquidity point, obviously that's a kind of a commercial / business point rather than necessarily a legal point. But I think it does go to how the exchanges are regulated. You know, obviously you can have, and presumably if you've got $500 million worth of Bitcoin, you're probably going to do that off exchange. You're going to do an OTC, an over-the-counter trade. And so the price mightn't necessarily reflect what's on exchanges, but oftentimes exchanges and the prices that exchanges discover is what's kind of used as a reference point. And up to now, certainly in the US, I mean, Kevin, I think, mentioned it, you kind of got, if you're to spin the regulatory roundabout, you've got payments law, you've got securities law, and then you've got commodities potentially. And I think at the moment, you know, when Bitcoin first came to the scene, the exchanges were regulated as money service businesses, and were regulated really with anti-money laundering and know your customer requirements as their main focus. So Coinbase, for example, have to register in 50 different states as a money service business, or you know, the comparable regulation for each individual state. When really now, I think Bitcoin and the other major cryptocurrencies have reached a scale in terms of their market that they really need some market-based regulation, which I think the SEC has to some extent, and also the CFTC has experience in regulating markets, in dealing with things like spoofing, wash trading, and other abuses that currently don't have any sanction as it stands, unless Coinbase or GDAX or whoever the exchange is decides to put them in its rule book.
Does that play OTC? OTC means over-the-counter, not necessarily going through Coinbase or Gemini, Bittrex, Poloniex, or is that an exchange issue?
I would say it's an OTC, and I'll explain why. I think, so last week there was an event that I think kind of flew under the radar, and just to take a step back, I'm generally a derivative / commodity lawyer. So commodities are fall under the purview of the CFTC, the Commodity Futures Trading Commission. You'll notice there I said Commodities Futures Trading Commission. They generally do not have oversight over the direct commodity market, the spot market of Bitcoin. However, in 2011, in the Dodd-Frank Act, the CFTC was given the power to take action potentially in a spot market against market manipulation and false information. So last week they issued what seemed to be a pretty straightforward action, but they took it, and it was the first time they've ever taken that action as it relates to the Bitcoin spot market against an alleged Ponzi scheme. And that's not particularly groundbreaking, but that's the first use of their power in the Bitcoin spot market. So
This is the CFTC?
This is the CFTC. I don't think, so they have the power to regulate a spot market. In general and in practice, they'll only do so if it affects the futures market on which that commodity relies. But there's nothing legally stopping them, and they do have the power to regulate that market. So if somebody in the OTC market was, taking some action that had an impact on exchange prices or just the spot market generally, then CFTC would be capable of taking action.
So we're seeing now a lot of hedge funds pop up all over the world, between $5 to $100 million. Again, speaking to liquidity, and it's potentially $500 million hedge fund. But the majority of the trading happens off exchanges, but it's likely that the prices are dictated by exchanges. And the exchanges, I don't think, handle, over-the-counter, I think this is speculation here, but OTC is about anywhere between $100 million to several billion dollars per day, whereas Bittrex and Poloniex is orders of magnitude less than that. So we're potentially seeing prices dictated by smaller amounts of trading, whereas the greater trading is on OTC. And I think that plays because what if one of these hedge funds put in, we saw it on GDAX, someone put, was it $10 million sell order on Ethereum, maybe it was 30 million, and immediately crashed the price. But that happens on the OTC on a regular basis, on a daily basis. So if we have now one of these hedge funds that decides to put in a $20 or $30 million sell order on Bittrex, the price of Bitcoin could just crash immediately. And now that these are kind of happening everywhere, especially if we have potentially a $500 million fund come up, do we really have the liquidity for this? Is this, and again, this is more of a business commercial point as opposed to law, but is this potentially not the best thing for the ecosystem at this point?
I'll talk a bit about this. So, how much volume was there today? Like billion and a half?
1.8.
Yeah. So there's 500 million, 1.8 billion a day. It's growing every day. I think it's fine. The exchange question is interesting though. I like regulatory roundabout.
Yeah, I think people want regulatory student roundabout. I think suit.
Probably never know. Bros stuff. I don't know, man. I'm trying to follow. So the regulatory suit roundabout is interesting because exchanges, you spin it and you land on the payments piece. And that is governed by Financial Crimes Enforcement Network. And what that says is if you're accepting and transmitting funds on behalf of other people, funds can mean cryptocurrency. Then you're a money transmitter. And that's such a broad definition. I mean, think about how often you borrow money from people, or you go out and you split a bill. You take money and then, you take their money now and then you give it to the waiter, right? Like you're accepting funds and you're transmitting it to someone else on behalf of someone. It's such a broad definition. It's crazy. So exchanges clearly fall under the definition of accepting funds. They take custody of crypto, and then they hold it in their wallets, and then they transmit it on behalf of their customers. Some exchanges have non-custodial wallets. For instance, like Shapeshift is an example where you don't actually give your funds to Shapeshift. They have a separate system in order to sell you different versions of crypto. So, but my point in landing here is, this is just one small slice of the wheel, where you have Financial Crimes Enforcement Network, which is worried about, think about the name, financial crimes. It's worried about money laundering, and it's worried about funding terrorists. Now, if you think about that as a driving force of a regulatory agency, it's not going to cover all the things that you mentioned, like wash trading, like spoofing. Like they're not going to care as much about things that kind of matter to the industry. So you have to turn the wheel a bit, get to whether or not the SEC governs the exchanges. Well, the SEC is a Securities Exchange Commission. So if they're not selling securities, then what jurisdiction would the SEC have? So you spin the wheel again, and you get to the CFTC. And generally speaking, these things are considered commodities. But as you pointed out, the CFTC doesn't really doesn't really exercise a heavy hand with its enforcement over, even though it has the authority to, over the exchanges. So, I mean, there were some actions for some margin lending that was going on in the exchanges. But the spot commodity transactions, which is the majority of what happens on these exchanges.
Can you speak to what does that mean, spot commodity?
So a spot would just be the direct trade. So if I traded a Bitcoin with Josh right now, if we agree tomorrow that we're going to pay, that basically he'll take the risk of what the price is tomorrow, that would be like a forward, and that would be a derivative, would be a contract that is based on an underlying asset, and that would be the derivative market. The spot is trading directly